Good morning. This is Paul Georgi from Allendale. It's August 24th, 2011. We're Wednesday morning. We've got very quiet markets overnight in the grains with a little bit of profit taking, and I'd say that very little because there's still two major questions that trade's concerned about. They're concerned about the yield, and they're concerned about Dr. Bernanke's comments on Friday. The yield, the answer to that question is give Allendale a call, and we would be very appreciative of your help in determining what kind of yield you might have this year. The producers out there, we're in the middle of the Allendale farmer survey, of the yield survey, and which has been a report and survey that's been actually very accurate here over the years. So give us a call. You can either call us here at Allendale, 800-262-7538, or you can go right to the website and fill out the information requested there on your yield and the situation that you have specific to your farm this year. So that would help us out, and we'll release that number early in September. But the key that we fight every day is comments from producers, other analysts, surveys, tours, you name it, on what kind of crop is out there, and the numbers just continue to mount of the losses that we see, so or they see, and I think that's very critical here, that we have to take a step back and look at what kind of crop we've got, what kind of demand is being hurt from higher prices, and where do we go from this point. And I think that's something that will happen here over the next several days. The other concern the traders have got is what the Fed's going to do and what kind of comments are coming out of Jackson Hole, Wyoming on Friday when the Fed chairman speaks. A year ago at this conference, he announced the QE2 plan and putting more money into the system. It's anticipated that he's going to announce a QE3, and everybody is behind that idea. We've seen a huge rally in the stock market yesterday, and that is because of the anticipation that there will be a QE3. The question you have to ask yourself is, what if he doesn't announce a QE3, and what happens at that point? And I think the volatility is potential is still very high. These markets are winding themselves tight as we stay in a narrow trading ranges throughout the day, and traders seem to have the attitude in the grains anyway. They don't want to sell anything. So it's a warning sign, or a sign that you have to be aware of, and when you make your marketing decisions of the crop that you've got, or trading decisions, use risk management tools. There's plenty of them out there, and Allendale would be happy to discuss any strategies that you might have. Some other news, we did have Moody's downgrade Japanese debt overnight, which has caused some pressure on the stock indexes. And then just a few minutes ago, the durable goods numbers came out, were surprisingly better than what trade was expecting. It was up 4% in July, while the June number was down 1.3%. So those are very conflicting issues that we've got to deal with there. The European debt situation, a lot of talk in news wires this morning about it again, and what each country thinks might be the solution. But we'll have to see how that plays out here later on. We did get some rain across part of the Corn Belt yesterday. I would say 40 to 50% of the Corn Belt got some rain. The rain moved further south than it had been tracking. Champaign, Illinois, Indianapolis, Bloomington, Indiana, those towns did get some rain, even though it may have been as much as a half an inch. Well needed and well accepted by producers and crops in those areas. In the livestock trade, Canada announced their cattle inventories, which was down 0.8% on the total number, but the breeding herd continues to slide down 2.1% lower in beef cows, and total from their highest number in 2005, it's 1.23 million head less breeding herd in Canada. So the cow-calf industry and the cattle industry continues to constrict here in the U.S. and in Canada. In the cutout values, we had dressed beef down 31 cents, select down 163 yesterday. The hog cutout was down 112. Maybe seeing some effect here from the economic situation. Prices have rallied enough where now we're seeing some backing away at the retail counter. We also have Labor Day coming up, and usually is the end of the cookout season, and a lot of featuring going on during that period of time. Post Labor Day, things slow down. Travel ceases and get back to a more normal situation in households. So we're looking at markets here that steady lower in the cattle market, hog trade, cash markets are steady to $1 lower. Looking for maybe a little more pressure there as we go through today anyway, and watching outside markets for further directions. So if you got any questions, give us a call here at Allendale at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning.